Good afternoon or good morning, depending on where you are, everyone. Welcome to today's morning coffee with Mike. A little bit later in the day, we're testing this new time. Let me turn the music down a little bit so that way you could hear me better. Got some Queen playing in the background. Great band. If you aren't familiar with Queen, check them out. Anyhow, so today's episode is special. Today's episode is special for a number of reasons, and it even has me standing up today. So, number of reasons. Number one is brand new time, testing out this time, 11:30. But the big reason why today is so special is because today is a tribute episode to the late William O'Neill, who was my mentor for many, many years. In fact, he's the guy. Not only did he write this book, and we're going to talk a bit about this book right here, How to Make Money in Stocks. If you have not read this book yet, How to Make Money in Stocks, highly, highly, highly recommend it. This is the one that really got me started on the right path. It's not the first book that I read, but it's the one that got me on the right path. And this is the book that I studied and studied and studied like it was a textbook. Went through this so many times. I actually got myself a new copy of this one because the other one was just really so many notes, kind of a lot like the spine's broken, all those things. Got myself a new copy of it. How to Make Money in Stocks. Grab this book if you have not read it. But about William O'Neill. So he is someone that figured out how to make money in stocks, just like how the book says, right? But he didn't just do it. It's how he went about doing it that made him so extraordinary, and what he did afterwards that made him so extraordinary. And the reason why I want to do this tribute episode to him. So, how did he go about doing it? He didn't just cook something up out of nowhere and try to make something work. He struggled. He struggled too, just like how most of us struggle when we first try to trade stocks. He struggled when he first started out. And the way that Bill went about figuring out, well, how does trading work? How do you not only find the leading stocks, the ones that could go up several hundred, several thousand% in a relatively short period of time, but how do you get in on them in the early stages, right? How do you not miss that giant move? How do you get in while the quote unquote getting's good? How do you find these kinds of names? So what he did is, which is what I would recommend that we all do, right? Because the way that you're going to learn from somebody is to not just read the book. Of course, read the books and do the suggestions, but it's actually walking the path that we start to gain the experience. So what Bill did was he went back and researched, well, what were the qualities of these stocks that ran up? And not only did that, he took a look at the major institutions and that were performing well and looked at, well, what are these guys doing, right? Modeling success was a huge thing for O'Neill. And so what he found when he looked at these big funds that were performing well, like Fidelity, a Fidelity Contra fund, like, well, what are they doing? What he found was that they weren't just buying stocks down at their lows. They weren't buying the low EPS names or the low PE names. What he found was that these institutions that were outperforming would be buying at the 52-week highs, at or near the 52-week highs. That's counterintuitive, right? Well, if you don't, you want to buy low and sell high. Well, what he found was that the best institutions of the world, the bigger performers, would buy high and sell higher, right? So if something is trading at, let's say, $50, if it's going to go to 51, then it'll be at a high. 52, 53, 54. If it's going to make its way to 100, then each time it makes a new price high, it'll be trading at its all-time high. So that's part of why I'm buying at 52-week highs. But it wasn't just that. It's like, well, what other qualities do these stocks have? And we'll get into it. I want to share with you his methodology. His methodology was called Can Slim. So many people use it. I use it myself. I started out with that, and then, well, what most people do, right? Well, we figure out what works, and then we customize it to our own styles. I did that. My other mentors have done that. Mark Minervini, who many of you have heard me speak about at length, and who is actually the forward author in my own book, The Trading Mind Wheel. It's taking what works, modeling success, and then going and making it your own. But there's so many great things that Bill O'Neill did that I want to highlight. So he found a winning system. He made a fortune with this system, but he didn't just stop there, right? So many people would just take the money and put it in their pocket, and that would be it, and nobody would hear about them at all. What Bill did was he not only did he write a book, the book came later on, but he made a newspaper. he, he made a newspaper, and this is going back many, many years. He made a newspaper that would rival the Wall Street Journal, right? Because, well, what did he want in a newspaper? Well, what were the types of things that would allow him to have research done, right? Have the type of research that he wanted done, would share charts, and would also be able to help a lot of other people. He was really into helping the average person win in the stock market. That's one of the really the big thing that helped me gravitate towards him too, right? It wasn't just the methodology, it was the the mindset and the willingness to help others. Just like, man, like, if there's somebody that I want to be like, that's who I want to be like. William O'Neill, great. So he made a newspaper that would go off and rival the Wall Street Journal. In fact, many years ago, he even took out an ad in the Wall Street Journal promoting his own work, which is amazing in itself, right? Like going to your competitor to purchase an ad, and uh, just at the time, very innovative. It would be remarkable if that's all he did, but that's not all he did. He would then go on to create master level programs, write books, and go on this whole teaching spree to help share his knowledge with the world, right? He didn't just stumble upon a system. He wanted to share his knowledge in as many ways as he could. In fact, he started out just in small meetups, right? Like, you guys have heard of meetup.com, right? Meetup.com is still relatively new, but when Bill started, he started out like just inviting people into a conference room, right? Like maybe you have 20 or 30 people, and started out like that, and would teach the system, teach the methodologies. And then later on, as the technology improved, he started to set up meetup groups all across the US, and they later on expanded to Europe and other parts of the globe, and all people just meeting and studying together the same methodology, with the belief, well, with the intention to just be there, help one another, right? How are we going to be able to improve? We're going to be able to improve by helping one another. And that's what Bill was all about. That's why he set up these meetups all across the globe. And uh, I was thankful enough and grateful enough to be able to find a meetup in New York City. Right, like it took me 10 years of trading before I even knew who Bill O'Neill was. And when I found out who Bill O'Neill was and read his book and started going to the meetups, inside a year, I became profitable. And inside a year, after a year, I became a leader of the New York City Investors Business Daily Meetup group. I did that for about a decade. In fact, I'd probably still be doing it now if it weren't shut down during COVID. And then after that, unfortunately, it dissolved. But in light of that, I started doing other kinds of meetups, doing stuff like this, right? Like because when you're passionate about sharing, when you're passionate about coaching, nothing's going to stop you, right? It's about getting the message out and getting the message out in the most efficient ways possible. That's why, right? Like we go to the internet and we do stuff like this. Sharing knowledge is so important, and that's what Bill is really all about. That's what his legacy is really all about, and that's what I think that his major contribution to the world has been, and he just influenced so many people. And again, it wasn't from a strategy of just cooking something up, right? It was based on research, it was based on facts, it was based on experience and actual performance, right? It wasn't just anecdotally. It's just like, look, here's 100 pages. The first 100 pages of this book go into models, model stocks, going all the way back to, I believe it was 1890 is the first one in here. Let's see. No, I apologize. It was wrong. 1885 is the first one. Richmond and Danville. Right. So, and he would go back and mark up all these charts in here. The first 100 pages of this book are all marked up historical charts. Then, well, when you finally get into the later periods, like 50s, 60s stocks that he actually started to trade, then you start to see his personal trades. But before that, he found it to be so important to go back and study the leaders, study stocks that would have fit your criteria, study stocks that were leading, and try to figure out, well, when would have been the proper time to enter this thing, and not and to be honest with yourself too, right? To not just go and say like, oh well, I would have bought at the absolute bottom. That's not what we're talking about here. It's looking for the types of patterns, the types of setups that you would have been trading, the ones that he found to historically work, and then say, okay, how would I have traded this thing? I would have entered here. Okay, I would have been stopped out there. When would I have re-entered? And then come up with rules and a system to take advantage of this. And that's how he made his fortune. In fact, let me share with you uh, his methodology here. So I'm going to share the screen. Let me move my coffee out of the way. This is more like an afternoon coffee, but still good. Usually I have about a cup, 2 cups a day. I've been switching over to tea lately. Anyhow, let me share my screen and move Instagram over here because Instagram is the one that I can't stream to yet. Got a question coming in already. Is Bill O'Neill and William O'Neill the same person? Yes. Yes. Interchangeable. A lot of people refer to him as Bill O'Neill. One of my mentors who worked with him for many years, Mike Webster. If you're not following Mike Webster and you're on Twitter, follow Mike Webster. He is fantastic, and he posted so many great things about Bill this week. Charts that he marked up, historical charts. It's really a thing of beauty. Go follow Mike Webster over on Twitter. But anyhow, this is CanSlim. This is the system that Bill came up with. Uh, and actually, if you read How to Make Money in Stocks, he says that it's not his system, that it's the market system. And that is a very important point that I think gets lost in translation for so many people. They think of it as like, oh, well, it's his system, it's the market system, well, whatever. Well, the big thing that Bill is saying there is that it's how the market is speaking to him, right? And so if we're going to model success, if we're going to go to the market and allow it to speak to us, that's how it works. Right? Like that's really what he was saying there is that it's the market system. So the market is speaking to him and it's showing him these things, this criteria, And so that's how he's able to say that this is the market system, this is how it operates. I've used this very similar, observed the same kinds of things. And I've only tweaked it very, very slightly for myself. But this is a fantastic framework here. So the first thing, the current earnings. So in CanSlim, there's this criteria, current earnings. The now, and funny enough, 2012, I was still in the IBD meetups. I found this screenshot, Googled Can Slim and was looking for different screenshots. And I actually remember using this particular screenshot in a slide deck so many years ago that IBD would give these to the IBD meetups, just like how you see the little IBD meetup logo down there. Anyhow, so current earnings. Well, what's current earnings? Current earnings, that's really should be current earnings and sales. Well, what Bill would look for would be 25% or greater quarterly earnings. And it wasn't just quarterly earnings and sales, it was looking at it quarter over quarter. So it was looking at it at this quarter versus the same quarter last year. So that way it eliminates the seasonality. That's something that is very important to understand. Next up was the annual earnings. And so you would start to look at what the annual earnings are, what the projected annual earnings were. And you'd want to see strong numbers from those too. The N in Can Slim is something that's very important, right? The N here in Can Slim, the newness factor, new products, new services, management, new highs, everything that's new about it. So disruptors, right? Like that's why AI has been going bananas because it's new and everybody wants to be piling into those kinds of stocks, the big institutions, right? Like it's not just you guys are on the stream. Like unless if there's a big institutional player on the stream, then it's the little guys too, right? Everybody wants the new thing. The institutions want it, and you can see their footsteps, and you see their footsteps in the supply and the demand. That's where the chart comes in. That's where you start to see these big volume spikes, right? Like so, for example, let me pull a chart over here. Pull a chart. Here's another stock that I'm in, Monday, where this one here is front door. You can see the big volume spikes. There was earnings. Here's some more big volume spikes. Here's Monday. Monday has been performing extremely well. I'll take my annotations off for a second so you can see it a little clearer. But look at that earnings, right? Came out on earnings, bam, just completely gapped up. Institutions are piling in, and then it formed this handle right here, came in on low volume, and then the big institutions just gobbled this thing up. Giant volume for multiple days in a row, pulls back a little bit, and then even more volume comes in. This is what is meant with supply and demand. That's what you want to see. That's what you want to look for. And these are just things that Bill observed in the market. It's what I'm observing. And don't just take my word for it. Don't just take Bill's word for it. Go and actually do the work and see for yourself. And that's the thing. And that doesn't get enough credit too, because that's the actual doing the work part is what's going to build the beliefs for you. Well, it's one thing to read in a book and trust what somebody says. It's another thing to go and do the work and experience it for yourself. That's what you want to do. Let's see. Well, what else here? Leadership. You want the stock to be a leader versus a laggard. There's a couple of different ways to look at leadership. It could be the group leader, it could be the sector leader. Ideally, it's both, but leadership is very important. Institutional buying. We kind of mentioned that a little bit. Well, you could see that with the volume, but also another great way to spot institutional buying is to look at the fund ownership. Look at the fund ownership quarter over quarter over quarter. And if it's going up, that's a good thing. The reason why is because the major institutions of the world can't fly in and out of stocks like you and I can. If you see them buying and you see more funds buying the next quarter and the next quarter, it's going to take them time to build positions. And the more of them in a stock, the better. Finally, market direction. Market direction plays a huge role. And if you're in a bear market or if you're in a choppy market, that's something that's going to lead to most stocks doing the same. And so it's a cautionary thing. It's a way to gauge the overall market health, what I like to call market mood. And all these things are factors in what Bill identified as the most important things to look for if you want to trade growth stocks. Now, let's let's take some questions here. I see some people speaking over here on YouTube. And I see a few more people over here putting questions in on Instagram. All right, so let's. First question that I saw here was from. I'm sorry, I'm gonna butcher your name. Sarab. Hopefully, I didn't butcher it too badly. Says, "You're doing great work, Mike. I just finished Minervini and your interview from 3 years ago, and it was really beneficial. We'll watch this video later since I have to go somewhere. Keep it up, buddy." Oh, all right. Thank you very much. I appreciate the shout out there. Let's see. Well, what questions do you guys have? Uh, in Instagram here. Will you speak in Hindi? No, I'm sorry. I don't know Hindi, but there is a app called Duolingo that just broke out today that I started a position in. Actually shared that one with members of the actual plan and all that, where I'm entering with stop losses and all that. But if you're on the newsletter, so I put out a free newsletter every single week. We had a tribute to Bill in there as well. I also share my trade ideas for. Whoops! Oh shit! Just spilled some coffee. Nah, not too bad. I'll wipe that up in a moment. But anyhow, I share my trade ideas list for the week in this newsletter, and Duolingo was on there. Last week, there were 35 winning trades out of 40 ideas. So lots and lots of winning trades in there. And it's uh, not just that, like, oh, the trade goes up. If you use a watch list as a tool, it can provide you great insights into market health. Because if you're looking for trade ideas, and your trade ideas are doing well, then that's telling you that, hey, it's a good time to be invested. Maybe you should be getting more active. If you look for trade ideas and they're all getting smashed, then guess what? The market's also giving you feedback that maybe it's not the best time to be going into the market right now, especially not going in heavily. So your watch list can provide a wealth of information. And uh, if you're not on the newsletter, go get on the newsletter. It's absolutely free. You could click the link in my bio or go to merrillwealth.com /newsletter to get that. Let's see what other questions are coming in. I've got a few more minutes here, and then I'm going to have to hop off. I've got a coaching call that's starting soon. Yeah, we do well one-on-one coaching as well. That's at the VIP level of our program. Currently, the VIP level is closed for the moment. The reason why is because we only want to we need to limit the VIPs to a small number, so that way, since we're doing one-on-one, if we had an influx, right, that and it was just open all the time, then we wouldn't be able to dedicate the amount of time to the one-on-one coaching. But we are going to open up group coaching at the premium level very, very soon. And uh, For more details on that, make sure that you're following, liking, subscribing, and on the newsletter because that's where you're going to hear about it first. Anyhow, from where can I take this book? So, if you go, William O'Neill's book should be available everywhere. This is a bestseller. So, if you, whatever bookstore you go to, you should be able to find this. Whether you're going to Amazon, Barnes and Noble, or wherever, this book is everywhere. How to Make Money in Stocks by William O'Neill. Highly, highly, highly recommend it. Study it like it's a textbook. That's what I did, and it changed my life. Let's see. Any other questions? A lot of people jumping in, saying hi and hello. Hello, everybody. It's good to see you all. Let me know what you think of this new time of doing it at 11:30. I really enjoyed it today so far, but I'm curious to hear your feedback as well. Just scrolling over here on Instagram. Yeah, you guys over there on YouTube, type into the chat and let me know what questions you guys have too. I see a bunch of people over there on YouTube. I feel like this is a better time for the YouTube folks. I'm curious how it works for everyone else. Let's see, any other questions? I'm gonna wrap this up soon. Hopefully, you don't hear too much background noise. They're actually repaving the street outside of my house, which is great. Long overdue. What do I think about today's market? So today's market, we got a brief pullback. Let's see. Let's bring this back over here, and then I can share my screen again. So I'll share my screen over here on YouTube World and over here on Insta. Let's see, current market. So the S&P pushing higher, following through. The Nasdaq doing the same. Yeah, the market broke out in a big way last week, and so far the action is very positive, especially with the Russell, the NYSE, and the Dow. And you might be asking yourself, well, why is it very positive on those three? Those are the three that are down right now. The reason why it's positive is because if you look at how those three are consolidating, right? Like over here, so you got the breakout on Friday. This is so far as an inside day. Price tried to sell off, and well, we're still pretty early in the day, right? Well, we still have a few hours until the market closes, but so far, price pushed lower, and it's in the middle of the range. It'll be interesting to see where price closes for the day, but that'll help. Uh, that'll provide us with a lot of great information as well. Um, yeah, so far, so good. And also seeing stocks, especially the types of stocks that I'm interested in, uh, performing well. That is also a positive too. So if if you're interested in growth stocks or whatever stocks you're interested in and you see them performing well, that is one indication of the overall market health. Taking a look at the major indexes is another sign of overall health. I find it beneficial to look at the major indexes across time frames. We only had time to look at the daily, but I'll look at it on the weekly and on the monthly time frames too. Again, look at the stocks on your trade ideas list. Look at the stocks that you own. That should be a big tell, especially if you're focused on only buying quality, then it should be a huge tell. And with that, I think we're out of time. Uh, Again, well, William O'Neill, great man. Uh, if it weren't for William O'Neill, I'm likely not here speaking to you guys because I'd probably still be floundering, trying to figure this stuff out. But thankfully, I was able to not only find his work, but studied it and uh, ended up making my own path to success with it. So, again, if you have not read this book, How to Make Money in Stocks by William O'Neill, go grab yourself a copy, study it like a textbook. And if you need help, reach out because that's what I'm passionate about doing too. He leaves a fantastic legacy behind, not just providing a framework that works and explaining it extremely, extremely well, but inspiring so many people to go off and follow in his footsteps and do the same. Uh, God bless us for William O'Neill. May he rest in peace. And I thank you all for joining me today. Hopefully, you enjoyed this episode. And if you did, give it a thumbs up and subscribe wherever you happen to be watching it. I'll see you guys back here tomorrow again at 11:30. Until then, take care. Much love. Peace out, everybody.